Good afternoon. This is Brian Splitt here for Allendale with your closing commentary for the week ending Friday, June 3rd, 2011. We did have some mixed settlements today in the grains. Corn did finish the day lower. July was down 12.5 cents today at 7.54, and that is actually down 4.5 cents on the week. We did have new crop corn December down 8 3/4 today at 6.86 1/4. And even though we were lower today, that is up 2 1/4 on the week, and still settling above the previous highs of that market at 6.84 3/4. So on a weekly chart, still looks friendly. On the soybean side, we did have the July contract up 7.5 today at 14.1/2. That is up 34 3/4 cents on the week. So good strong week for the old soybeans. New crop beans up 4 1/4 today at 13.97, and that is up 28.5 on the week. A little something to note on the new crop soybeans is another day where we have traded above $14 a bushel, and again another day where we have not settled above 14. So I believe this makes the fourth time that we've traded through 14 but have not been able to close above it, and we're going to continue to watch that. Likely if the market can find enough strength to close over 14, you might find some more investment buying coming in there. As far as the wheat market goes, we did have the July Chicago contract up 4 cents today at 7.73 3/4. That is down 46 cents on the week. And remember, early in the week, or actually last weekend, we did have Russia lift the export ban, and that's where we found most of the early pressure in the week was off of that news. For the Kansas City July contract, we finished up 5 1/4 today at 9.14 1/4, and that was down 28 3/4. But really the mover and shaker today was the July Minneapolis wheat, settled 41 cents higher at 10.60 1/2. And for wheat to settle higher on the week, up 4 1/4, that's a pretty big deal considering the news that we had gotten earlier. So as far as what we saw today, we did have some profit taking in corn. We've got weather forecasts that are suggesting that we can see some continued aggressive planting for producers that were not able to get the corn in the ground east of the Mississippi River. And just a personal anecdote, I've got a couple clients in Ohio, one of which said that he will be done with his corn plantings by tomorrow night, assuming he can run full bore all day. So, that is probably some of the reason why we saw some pressure there. And again, if we are planting the corn, then that means that we're probably not going to put those acres to soybeans. So that's another reason why we had some good support under the bean market. But also Argentine farmers appear to be hoarding their freshly harvested soybeans, parting with what's already been contracted, but what has not been contracted they seem to be holding on to, looking for some higher prices to come. We do have firm bids for soy meal with flooding near the Missouri River, and looks like the biodiesel production has been upticking significantly, and that is keeping demand firm. Again, with wheat, the main story for the week was the lift of the export ban by Russia, but it does appear that we do have a potential supply issue on this July Minneapolis wheat contract. Whether or not we will see a squeeze play is yet to be determined, but I don't believe that end users are bidding this market up 60 cents late in the day. That seems to be some pretty aggressive short covering. So one other thing that we did hear is that Deutsche Bank will typically do their rolls. They don't roll front month to the following. What they'll do is they'll roll July to July of 12. So we did have some speculators in there trying to get ahead of the Deutsche Bank roll, selling this July Minneapolis wheat, and really trying to get in ahead of the Deutsche Bank roll. And with this market rallying, that added to the necessary short covering late in the session, so that probably exacerbated today's move. But as far as some of the other markets, let's go over to the meats. We did have the hog and cattle markets both recover from some early selling. We did have some poor job numbers come out this morning, and that will speak directly to potential demand down the road. So because of that, we did start under pressure, but as of the taping of this recording, the June hogs are actually up about 17.5 at 89.25 in the Globex futures. We did have some pre-weekend short covering after those numbers came out, and we've got cattle market also up over $1 at one point in the futures, also adding some spillover buying to the hogs. As far as the cattle market, June was up 90 at the tapings of this recording at 103.50, and we did have some buying spurred by talk that we had some cash trade at 105, and with good packer margins, there's talk that we could see some better cash trade next week as well. Something interesting to note is this June cattle contract has settled lower on the week, 9 weeks in a row. So we're about due to start changing that trend. Hopefully we can get some support under this market here. And it looks like we do have Monday will be first notice. We are not expecting any deliveries on this June contract. And something to also keep your eye out for with better weather forecasts. Hopefully we can get some demand back in from the grilling and maybe get some support under these markets from better grilling demand as well. As far as outside market activity, the equities under pressure. Again, main story there is going to be the disappointing employment numbers that we got this morning. Dow futures down about 100 points, S&P down about 12.5, and NASDAQ down 29.5. Looks like the dollar index also under pressure off of these numbers, down 57 at 73.80. And just to give you a perspective, 72.86 is the current contract low. So we've only got about a 100-point buffer between current trade and new contract lows. And a move to new contract lows in that dollar could mean more buying from the spec community and commodities in general, so we'll want to watch out for that. Gold up $9 at $15.41. Silver down 15 cents at $36.05. We do have a lot of things going on right now with macroeconomics. With the grains, we've got weather to pay attention to. We've got some reports coming up. We've got a WASDE report that will again go over our supply and demand balance sheets, and then we've got the all-important planted acreage report and quarterly stock report at the end of the month. So a lot of things to look forward to. If you have any questions on how to protect what kind of risk you have in this market, or if you just want some ideas on how to try and make some money here in this volatility, please give us a call. You can reach us at 1-800-2-MARKET. That's 1-800-262-7538. You can also look us up online at www.allendale-inc.com. And good luck trading to you next week. Thank you.